with all of these IPOs coming out lately, everyone's left wondering which of these is a buy, which isn't. What should you do with all these IPOs that's going on right now? Because you think it's a little rough because there's so many different IPOs, you don't know what to buy. So we're gonna take a look at Peloton stock. Is Peloton stock a buy? So this bad boy IPO'd, I believe at 25.50. So actually, the thing is, it's up around 7.5% from that point there, which is actually relatively decent for most recent IPOs. Um, a lot of these recent IPOs have been getting hammered right off the start. For the first few months, losing share value incredibly, but Peloton really hasn't. It had a rough little start here, a rough first month. It really started to pick it up, and back in December, there's a lot of good news going on for Peloton. The thing was up, up to around $37 per share. So there was some good news about it, and that really boosted it up. And since then, it's kind of fallen back down, back to around a little bit above IPO levels. So nothing crazy. So is the stock a buy right now? First, we're going to take a look at what Peloton is. Obviously, if you don't know Peloton, they are well known for their treadmills, bikes. Specifically, mostly their bike is their main deal. They also have a treadmill. They have some accessories, apparel, of course, and applications to use on those. So Peloton here, they've got a very expensive little bike, obviously meant to keep people fit. It's the goal. People want an interactive workout experience, and that's what they provide with both their treadmill and their bike. You see from this, they have a big display. You can really play whatever you want on there, as far as like if you want some motivational speakers, whatever you want to do. If you want to pay for their subscription where you can get training for them, they'll have a training regimen for you where they'll have a guy up there doing his thing, like any workout person's name? Billy Blanks right here. Billy Blanks is going ahead and teaching you what to do for the day on the bike. And if you want to follow that, you can. If not, that's fine. Technically, you don't necessarily have to do that and use that display that way, but it's what it's good for, and it's actually a very good product tie-in. So I think it's pretty intelligent because you're offering that, because most likely it's hard to get motivation for people, but if they actually have a regimen right there laid out for them like that, that's actually interactive as that is, it's pretty helpful actually, and that can be pretty beneficial. So that's Peloton. We'll get into the specific products later. I'll get into the numbers at the moment. So currently trades at a market cap around 7.7 billion, but we're gonna look at this revenue now, and you're gonna think like, whoa, what's going on? Trailing 12-month revenue of 1 billion. So again, market cap is 7 billion, revenue of 1 billion. It's scary, but you do see some very good revenue growth if you look at this actually. So actually they've doubled their revenue year over year from June of 2018 to June 2019. So very good in terms of that. I don't know if it's necessarily going to keep that. It's definitely not going to keep that high of a trend up, but they've doubled year over year 2 times in a row. But that's very good. But again, what I love to look at here is going to be this net income line. The net income line has also decreased, so they're losing more money off of that revenue. And that's kind of the scary part of all of these IPOs that have been coming out lately. They're just money losers. They don't make money, and they keep growing revenue rapidly, but they don't stay flat on loss. They just increase that loss with it. So they're taking big loss. But I will say, so that's really the number aspect of what I want to look at with this stock. I don't think the value is fair right now, just because I don't know what the future holds with consistent loss. I don't know where all this stock can actually go. It could pull a Tesla route, or it could go in the dirt. I mean, you never know. It all depends on the hype and what the market feels about it, which I hate saying, but rising net income, or really declining net income, is not a good sign if it's negative already. Not something you want to see. But revenue increase is very good. Very good revenue increase for them. I'm excited about that. It's a good benefit for them. So if we're looking, let's look at their products, because I think they have the potential to outweigh that net income issue. And really the main reason I find that is going to be in their apps. So their services category is frankly just going to be, it should be very good for them. If you think about a company like Apple, they've really transformed into more of a growth company yet again because of their services. And services aren't really something that you need a Peloton bike for. And I'm just going to lay it out right now. Peloton bikes, they're absolutely not for everyone. They're for a specific market. They're going to be the upper middle class to the top echelon of people. They're expensive bikes. You're going to be paying, not many people are going to pay $2,500 for a bike. I mean, that's just really not how not many people are going to do that. That's really just how it is. So I think the way that they can make that up is through their app subscriptions, and I think that's a very smart strategy for them. My concern with the main bike category and the treadmill category is if we get into some recession-type climates, what happens to this company? For one, really not many people are going to be planning on buying any of these. This is obviously a big splurge purchase. For a bike at least, $2,500 is very expensive. But that's not necessarily their only business model. And that's why I think they really need to grow this subscription model. They need to grow the services. They really need to do that because I think it'll be very beneficial for them in the future. And it's a way that it'll really cut down on costs too. I mean, if you think about it, cost of product is going to be a lot better. They can definitely increase their profitability through the use of subscription services. It's a really easy way to do it. And I can guarantee you, I mean, there's so many people that do it right now. It's an easy thing that they could certainly do. As long as they manage it properly, though. It all depends on upper level management if they actually are doing it properly. So, again, I'm not too excited about the actual main core of the business being the bikes and treadmills. I'm not. But I think that their services segment, if that becomes the core of their business, it's going to be insanely beneficial for them. Cut down on costs, increase revenue. It's going to be easy to do. Because people can take that, they can work out on their own equipment, they can go to their own personal gym, whatever it is, and they can use those apps to actually get that workout regimen without having to pay $3,000 for a bike. People aren't going to do that. They're going to want to pay $10 a month to go to their local gym. That's what they're going to want to do. I mean, it's more cost effective, really, if you think about it that way. So, services are where it's at. But let's take a look at some of the news related to this. What do the pros think? Well, to be fair, analysts are actually pretty high on this stock. Analysts are high on this stock. That's all I can really tell you. Most analysts really are, except for Citron here. The dude's named after oranges and lemons. So, do you really trust a citrus guy? I don't know. He gave this thing a $5 price target. That's wild. So, obviously, this guy's just trying to, he's trying to go ahead and make a statement. But, if you think about it, look at this down here. Citron, Mr. Citrus, Mr. Orange returned 43.3% net of fees in 2019. Would you look at that? Maybe this guy knows what he's talking about. But $5 price target is a little bit rough. Most analysts are actually pretty positive, where the average price target for Peloton right now is sitting somewhere in the low 30s. So it's actually pretty exciting for them because, what can I say? If the analysts like you, there's a good chance that people will be buying you. So it's good for them, but I don't necessarily agree with the bulls on this stock. I think it's just going to stay stagnant. I don't think there's going to be much movement for Peloton stock. If anything, it might go down because I don't necessarily like the valuation. I think there are a lot of key earnings that will happen in the first two earnings of this year for them. I think are going to be very key for what happens to this stock because right now people have bought on hype, and the only reason they're going to be buying back off that hype is if they continue positive growth. So they're going to need to put up some good numbers and actually try to work on that net income line if they want to get people to buy it. That's frankly how it is. So right now, Peloton stock, not giving it a buy. Adios.